Hello, this video is going to explain the assignment Understanding Amortization, and we're going to just walk through part one here together so that it makes sense. So they give us our whole scenario here that Janet graduated from college. She has decided to treat herself to a 6-week vacation, and so she's taking out a loan for that. And they tell us the loan's for $3,500. And her interest rate is going to be 24%. So here when you do the part on your own, you are going to use this calculator. And so we will look at that, but they have also just given us kind of the answers we need for this first part here together. I don't expect you to necessarily put the answers in here. Like I said, we're just going to kind of walk through it. So when you do part two, that will make sense for you. So the first question is, how much is Janet going to pay every month? So when I come up here and look, we have the payment date, the payment, the principal, so that's what's actually going towards her initial loan, how much is going towards interest, how much total she paid interest throughout the loan, and then what is her remaining balance. So we can see here that her payment every month is going to be $185.05. And since it's a fixed rate loan there, it's the same every month. Okay, then on March 1st, how much of her payment went towards the interest, the principal. So her first payment here, we can see, like I already pointed out, interest, she paid $70 and $115.05 went towards the principal. And then looking at Janet's payment for April, how do the interest and principal compare to what she paid for the previous month? So when we look here, now you can see more is going to the principal and less towards the interest, and that's just how the loan works throughout. So you're kind of getting more paid down the farther you get into the loan. And let's see, by the time she pays off her entire loan, how much interest will she have paid? So we come and look down here at the very bottom, and her total interest, it tells us $941.17. So how much will the trip have cost her in total? So we would take the $3,500 and adding the $941.17 to know that is the full amount. So almost $4,500 was how much this vacation cost her. So that's just kind of the general stuff. We're not going to look and worry about this extra payment because you won't need to do that on the next one. So now what you're going to do is use the bank rate calculator, and so I'll just open that so you can kind of see how it works. And then you're just using the information here, which is still $3,500, 24%, but this time she's going to pay it off in 4 years. So put it in there, 4 years. So is it 24, 25? What was it? 24. Okay, and then I just click calculate. Okay, it tells me the monthly payment, but I still might need to know some of that other information. So you click the show amortization schedule, and you can change that start date if you want it to match up to that 22nd or February, what was it? February 2022, just to make it match up, and then you have that same type of data that we looked at there. So like I said, part two is really all I'm looking at for you to be completing, as well as part three. So part one was just kind of us going over together, how does this work, how does this look.